Good morning. You're watching The Market right here in 80 now with me, Aisha Faridi, Aman Dabash, and Nikunj Dalmia on the show. Guess what? We're already in December, but what a fabulous November it's been for our markets. And it seems like we're soon going to be hitting that destination 21K and, of course, close in on that all-time high as well very, very soon. In fact, within counting distance of that. And what a performance it's been, right? I mean, a 20% uptick coming in from the April lows. Who would have thought this rally is going to be so swift?
You know, Aisha, while you look at the market and you say, okay, we are nearing an all-time high. You know, the ring of that, it's very nice, right? But the fact of the matter is that on a YTD basis, it's not even a double-digit gain for benchmark indices. So Nifty is not the real story. We discuss the Nifty view every day and then try to, couple it up with the market, but that's not the real deal. But Nifty is Nifty. You got to understand where we are. Okay, nearing an all-time high, guys. Dow touched new closing high for 2023. So we are not alone. There is a global risk-on rally, which is what we need to recognize, and that's a large part of the reason why markets from the October low have actually, spotted up. Now, what is in store for December? The point which we've been making that a happy Diwali rally may just extend itself well into the December of 2023, and that is translating into a real deal now. Historically, the month of December has always been a strong month. The starting point for the Nifty, that's the setup for you. We're starting at a 140 point premium, and the Bank Nifty is also starting at a 260 point premium, which means there is enough and more momentum in the market. So last week we were discussing the following, which is that the direction was up, the momentum was missing. Has this market regained momentum, right? Direction was never a question. It was only momentum. But based on this week's price action, especially large cap stocks, has the market rediscovered momentum? Looks like it has. If the market has rediscovered momentum, what will happen? Large cap stocks will lead the rally. Nifty will rush towards the new high, and the sleepy stocks,
Yeah, that's exactly the point that I was coming to, that what gives you further confidence that the market rally has more legs, especially the indexes. Non-performance from big boys in the entire list that we called out, everything from Reliance to TCS to Kotak Bank to HDFC Bank. What happens when they begin participating in the rally? We're looking at, blue sky zone.
So Aisha, just think from an institutional perspective, right? These are stocks which will essentially be driven by institutional investors. If you are an institutional investor, you have two options. One, you could wait it out and you can come post-May, but then you will get markets 15% higher for sure. Valuations will be 15% higher, or you can buy now and assume that there is a 10-15% volatility swing. The impact of the exit poll, which everyone thought could be a swing event, is actually quite favorable for what markets want in terms of where the BJP, what the exit poll template is. So I think I will not be surprised that the last hurrah which we've been talking about in the market actually could be coming courtesy FI dominated stocks, and especially some of the stocks which have gone into long hibernation. Winter is the time when you get into hibernation, but winter is the time when stocks.
The fog today in Bombay. It was foggy, actually.
Winter is the time when you get into hibernation, but some of these stocks actually could come out of the winter hibernation or
the
some
polar bears.
Yes.
Yeah, long hibernation period.
Yeah, and just going by the hit rate as well that we've seen in the month of December of the last 10 years, it's been interesting because 60% of the time you've got the Nifty of the last 10 years, which has seen a smart up move. So that really is a telltale sign. A quick roundup of the global markets. While it has been pretty rosy when it comes to Wall Street, you had cooling inflation data, pretty strong earnings. All of that helped up, notch up a rally for the Dow Jones as well as the S&P. Asian markets this morning not quite reflecting the same momentum. You've got, for the most part, the Asian markets sliding, and clearly that's on the back of some manufacturing data that's come out of China. But that aside, the other big talking point, of course, is voting season, and that has ended for the year. The nation, of course, is gearing up for the big results ahead of the Lok Sabha polls. It seems like the BJP is maintaining an edge in states like Madhya Pradesh, Rajasthan, as well as Telangana and Chhattisgarh. Let's get in Padmaja, who joins in with the latest takeaways. Padmaja?
They pretty much fall into the pattern of what Times Now had been speaking about. For example, there were very many factors which were at play over the last few months. Number one, there was a lot of polarization that took place in several parts, especially in terms of what happened to Kanhaiya Lal, that happened in Udaipur. That particular seat, which now falls in the Mewar region, takes about 40 seats to the state assembly. In that area, there was a lot of polarization. Then you have the area of Rajasthan that borders Haryana. That also has seen sporadic incidents of violence. There is a lot of cow smuggling that takes place over there. There was the murder of Nasir and Junaid. Then you have got the areas which are, say, Tonk and Dausa. Those are also areas which had in the past seen some clashes which took place because of cow smuggling. So there is polarization there. Those are the regions where the BJP has made substantial gains according to the exit poll numbers that have come out. The other factor in addition to that was the communal violence that took place. For example, the Karoli riots. So you have the beheading of Kanhaiya Lal in Udaipur, you have the Karoli riots, you have got the cases of cow smuggling and the subsequent clashes that took place. The second factor which dented the Congress in Rajasthan is the perceived fight that took place between Sachin Pilot and Ashok Gehlot. Everyone knows about the rebellion that was engineered by Sachin Pilot. Eventually, there was an effort by the Congress to show that everything was fine. The differences had been papered over. To be fair, even Sachin Pilot himself came out and said that, well, let bygones be bygones. Now we are working together. Rahul Gandhi at the airport said, "Hum sab saath saath milke kaam kar rahe hain. Hum sab saath saath hai." But there were certain things which perhaps could not that easily be forgotten, especially among the Gujar community, which is what Sachin Pilot represents. Of course, he represented the entire state as Deputy Chief Minister earlier. But that is a vote that is very faithful to him. In 2018, rewarded him because as PCC chief, he worked to get the Congress to power, and the feeling was that he is going to be chief minister. This time around, that vote has shifted away. Of course, that's also something that the Prime Minister spoke of slog overs when he said that Rajesh Pilot was insulted by the Gandhis and Sachin Pilot is also being punished by the same family for what his father did, etc. So those are the reasons. The infighting, the fact that because of Sachin Pilot not being made chief minister, a certain group that is loyal to him seem to move away from the Congress, and of course the polarization. That is how one can read the results of Rajasthan, where the Congress, and to be fair, the state of Rajasthan also has a trend of changing governments every year. So a lot of people might just say this is, Rajasthan living up to its past habits. But remember that when people want to break that habit, they can. They have done it in Himachal, they have done it in Uttarakhand, but they chose not to do it in Rajasthan. These perhaps are the reasons why.
All right, thanks very much, Padmaja, for putting all of those details into perspective. So, Nikunj, clearly with looking at BJP ahead in MP Rajasthan, it seems like it's advantage Congress in Telangana, Chhattisgarh. From a market standpoint, how should one read into this?
See, markets had an assumption, and I think the exit polls and what has come out in the exit polls, I think it is advantage BJP. The swing factor from a market standpoint, of course, would be Madhya Pradesh. If BJP is able to retain that, that really will, give a spring in the stride to the bulls, depending on what the verdict comes out over the weekend. That's one part. From a market standpoint, the worry was that will the exit poll outcome be something which may be completely away from BJP, because we are talking about state elections and there is an anti-incumbency in play, and markets in a sense were worried about it. But that is something which clearly gets dismissed. So what happens now? Let's look at the setup. Global cues are strong. FIs have come back. There is demand at higher levels. We are starting a brand new series. December historically is a better month in terms of the seasonality which is at play. It's more bullish than bearish. You put all those factors together, I will not be surprised that we could be in for a good December. Could it be the first 2 weeks of December and then a flat curve after that? Could it be the entire December? That's difficult to say. But as of now, it appears that the ingredients in the melting pot are indicating that this market has some more, there is still more fuel left in the tank for the bulls, and I will not be surprised that the initial part of December will be dominated by the large cap stocks also. That rabbit and hare story, what we're talking about, I think now the large cap tortoise also will be getting some steam.
Okay. Okay, and the Nifty implied open is already indicating a start at that 20,350 nearabouts mark. In fact, all the macros as well are indicating towards the rally only moving forward, be it the GDP print, wherein the July to September GDP figure has actually risen by 7.6%. We're clearly retaining the fastest growing economy tag, and the growth has been extremely strong in the manufacturing sector as well as the construction sector. Agri, of course, has been a little bit slow than that, but overall, if you were to look at it, the numbers are definitely better than what the street was anticipating or penciling in. Also, granular, the street has been looking out for what the data points have been from the festive season sales. So today you'll have the auto numbers as well trickle in, and I think that is something that the street is going to be looking at with a magnifying glass. And I think, given the kind of rally that we've seen this week alone, Nikunj, within the auto pack, I think this is one sector which is only going to leap up forward.
Aisha, there used to be a time when GDP used to occupy all the center stage.
Yeah.
All our conversations
Gone are the days.
Yeah, gone are the days. Why? Because that is no longer occupying the center stage. There's a time when macro trade is at play, there's a time when micro trade is at play. And I think right now in the market, the micro trade which is at play, small cap, large cap, mid cap. So auto for me, I think is a macro trade. Within that macro trade, everyone knows that SUV is doing well, nothing new. Everyone knows that the festival season in a sense was strong, and we've got that sense from Mahindra and Mahindra, even Maruti. So I don't think we are in for a surprise in terms of I don't think market is expecting any kind of a surprise. And auto is a sector where since you get commentary mid-quarter, every month, you pretty much know directionally where things are moving. So then why are we discussing auto numbers? Well, the reason why we are discussing auto numbers is simply because is there a marked recovery in the rural stroke the two-wheeler space? If there is a pocket of surprise which markets are hoping that which could start kicking in, it could really be two-wheelers. TVS has done rather well for itself. Bajaj Auto exports are coming back, and for Hero MotoCorp, will the rural recovery start kicking in? Are we at the cusp of a rural recovery kicking in? Because this kind of a GTB data, which is largely fueled by government spending, which is largely fueled by uptick in capex and consumption, will start having an impact in rural economy. So if you frankly ask me, Aisha, if I put the dots here, the GDP is done well because the government spending is strong. Yeah. Government is spending because election is around the corner. What would be the fallout effect of that? If government is making more investments, the fallout effect of that would be felt by the rural India. That's why you wanted to, in a sense, get the feel-good factor back. That's why you wanted to take the inflation strain out, which means demand in the rural category from now to March or now to May actually could be the surprise factor for the market. Mark my words.
Okay. Marking those words, let's move on and let's find out what the global commentary as well has been marked towards. Vinny's here with a summary of all the overnight action. Vinny?
Good morning, and let's start with some commentary that is coming from Peter Schiff. He's talking about the gold prices. Yes, they may not have actually reached the new record high levels, but for the first time in a very long time, they've actually managed to close the month above the $2,000 per ounce mark, and this is what is indicating that it's a significant milestone, and likely gold prices could go up higher. That's a word coming in from Peter Schiff. Other than that, we have Bank of England's Megan, who's highlighting in terms of the UK interest rate may be doing less to hold back the inflation and the demand than currently thought. So yes, there is some work required on that front as well, and maybe the borrowing costs will have to remain at an elevated level for some time. That's the word highlighted by Megan as well. Other than that, Federal Reserve Bank's New York President Williams is highlighting and reiterated that Fed's benchmark lending rate is at or near the peak level, and said monetary policy is quite restrictive as of now. And lastly, we have ECB's Nigel, who's highlighting in terms of an upside risk for the inflation as well, and it's skewed. The risk is more skewed towards an upside that could be expected on the inflation side. So let's keep an eye out on these important commentaries that came in overnight.
All right, thanks very much for giving us that roundup on the global commentary. Let's move right on and chat a little bit more about Destination 21K with our chartists Naresh Mirani and Kunal Bothra, who's right here with us in our studios. And Kunal, talking about now some of the large cap laggards as well, perhaps starting to participate in the market. What exactly is that implying for us?
Well, good morning, Avan. So it implies very good for the overall market sentiment as well as the market positioning, because we were at a point where the mid caps and the small caps were just about getting into a a lot more overbought nature. In fact, if you look at the performance of the mid caps and small caps, particularly at large, and especially the stocks which have been moving up higher, they have somehow gone into a bit of a stagnant zone for themselves. But in the last 300, 400 points for the Nifty, from the 19,700, 800 mark, we've actually seen many large cap names making a strong comeback, whether it's the banking names, whether it's the likes of Reliance, or whether it's a few of the other tied to large cap names. Now, that generally augurs very well for the market sentiment, that to try and scale past above psychological 20,000 mark, as well as a possible new high for the indices, you have support of large cap stocks. We've also seen good round of unwinding in terms of open interest for the previous series, as well as the start of the fresh series, with a much more optimistic note in terms of the open interest positioning, especially on the Bank Nifty, because there is an addition on the OI front for the Bank Nifty for the December series. So I think in that aspect looks quite attractive and indicates that possibly banking stocks, which were huge underperformers, they could now make a comeback for the December series.
All right, Naresh, let's get in your take, because we've been talking about this, the fact that the markets haven't been lacking direction at all, but momentum has been lacking. Now with signs of a comeback, what is it that you're projecting by way of levels?
So good momentum seen in the last two sessions. And if we look at the global setup, we just hit a new 52-week high on the Dow Jones Industrial Average. So that indicates there is momentum across the world. We are seeing same thing happening in European indices, as well as Nikkei hitting new 52-week highs. So the structure is very clear, and we set up for a new all-time high today on the Nifty. So that is what I would expect on the start. So expecting this move, we can even go towards 20,500 in the current momentum, and then maybe take a pause. Similarly, on the Bank Nifty, we could test that 45,000 and 45,500. So we expecting more momentum to come up in the heavyweights over the next couple of sessions.
Stocks, and I can see it's a plethora of mid and small caps that Kunal and Naresh have chosen. Kunal, walk us through your list.
Yeah, so two buy calls. The first one is about Dixon Tech. The stock yesterday was just about coming close towards a breakout of a triangular pattern on the hourly as well as on the daily charts. So would suggest a buy with a target of 6,000, expecting a decent 8 to 10% up move further from current levels. Stop loss for this trade could be kept at 5,400. Tata Motors also is towards a breakout of a swing resistance above that 700 mark. It's managed to close above those levels over the last 2 days consecutively. So expecting a target of 750 for the stock and stop loss at 675.
Right. And Naresh, what about your stock ideas?
So first is a buy on GAIL India. The stock has finally broken out of a 5-year and an all-time high. Good enough consolidation done after that initial breakout at 115. Spent quite a lot of time between 115 to 130. And now a breakout is done with very strong volumes and a big price check. Expecting this momentum to be a start of a new trend for the stock. Short-term target price of 150, stop loss at 128. Second is a buy on Container Corporation of India, Concor. The stock, after making 3-4 bottoms around the 550 mark and 4-5 tops around 750 over the last couple of years, has finally broken out in the last few sessions. I would expect a new all-time high here and make a move towards 850 levels with a stop loss at 760.
All right, there you have it, all of your top stocks to watch out for in trade. Let's get a move on then and put the spotlight on individual stocks that will be in the news. And we've got Anisha here to discuss just that. Anisha, let's talk about Kesoram Industries, the share swap deal.
Oh, well, yes, finally, it's been in the making for a while. We were all wondering where the block of Kesoram will finally go. So now we know that Ultratech is the one that's going to take stake in Kesoram. There'll be a share swap deal that will happen. So Ultratech will issue one equity share for every 52 shares held in Kesoram. The share swap favors Kesoram by almost 24% because the investors will get worth almost 9,000 rupee share of Ultratech for around 70 to 54 in terms of the price of Kesoram share. Remember, for this business itself, the total capacity is around 10.75 million ton per annum. There are two integrated cement units. One is in Karnataka, the other one is Telangana. And if you look at the geographical mix that Kesoram usually caters to, it's largely concentrated in southwest as well as southern region. So Maharashtra, Telangana, Karnataka, these are the key areas that Kesoram actually caters to. Of course, it will help Ultratech to strengthen their positions in those areas and help it getting closer to that market mark of around 2,000 million ton per annum, which was their stated target by FY 28 to 30. So instead of making organic capacity addition, they will be able to do it partly through this inorganic acquisition. The expected timeline of the completion is around 9 to 12 months. And I was just going through some brokerage notes. It looks like for Kesoram investors, of course, the positive is the upside in terms of, the 24% upside in terms of share swap. But for Ultratech as well, it's been called a good deal in terms of the synergies it brings on board.
So, Anisha, I mean, this was long pending. It's not come at a surprise. So this is an acquisition which I think nobody's surprised with. This is pure consolidation of Aditya Birla Group companies, and this essentially is coming from, from the old guard, so to speak. Now, when you look at a deal, you look at the deal, and is there an arbitrage? Like Anisha explained that for Kesoram shareholders, there is an arbitrage which is there. So that's the price movement which will happen today. Second, is the deal being done at a fair value? It is at a moderate discount to what the current EV per ton for Ultratech is. But the margins of Ultratech and Kesoram are also different. So you add that back up and you would say it's a fair deal where you cannot say, okay, Kesoram has got more in terms of valuation or Ultratech has got less. So it's a very fair deal. See, the presence for South increases, the market share goes from 12 to 18%. So everything and anything in the deal I think is being done which looks shareholder friendly. But given that Kesoram stock has not kept pace with what Ultratech stock has done and it was trading below industry averages, that arbitrage I guess becomes a juicy part right now. Also, there is Mangalam Cement, there are some other group companies of Birla Group. Are we looking at more consolidation perhaps coming in the AV Birla, Aditya Birla Group, where other cement companies could also be merged? That is something which is worth pondering over in terms of where this entire consolidation will move for the Birla Group.
All right, there you have it. That's the latest and the editor's take coming in on the share swap deal between Kesoram and Ultratech. Let's move right on and also talk about the skyrocketing FS, because that's something we cannot ignore. We've got Samit here to actually break it down for us as to what the 7-day forward rates are indicating. And Samit, give us a sense as to how much we have to shell out now.
So we checked the ticket prices yesterday and we checked it for 7-day forward routes and 2-month forward fares also, and we checked the prices for the top 20 routes in India. So what did we observe here? Now what we are seeing here is that the 7-day forward, now among the top 20 routes the prices have increased for nearly 16 of them, but when it comes to the 2-month forward fares, prices have actually fallen for 13 out of the top 20 routes. And now if you see for the 7-day forward, now among these 7-day forward, 30%, more than 30% rise we have seen for 6 routes, and the common thing among these 6 routes is that either the flights are coming from Delhi or are going towards Delhi. Now the Delhi-Pune routes prices have increased by nearly 49%, Mumbai-Delhi by nearly 41%, then there is Patna-Delhi, Kolkata-Delhi, Delhi-Bangalore and Delhi-Kolkata where prices have increased by nearly 32 to 38%. Now when it comes to the 2-month forward, now there we have seen a decline of around 21 to 35% for the top 5 routes. Patna Delhi prices have come down by around 35%. Hyderabad Mumbai have declined by nearly 34%. Similarly, Mumbai Hyderabad has also come down by 21%. Then there is Delhi Pune and Delhi Patna where prices have come down by around more than 20 odd percent. That is the 2-month forward. Now why we have seen this sudden rise in the short-term fares? Now this could be because in the holiday period we have seen a sudden surge in the air traffic. Now if you see the average air traffic for the last 10 days, that stood at close to 4.6 lakh average daily air traffic. This is the domestic air traffic that we are talking about, as against 4 lakh passengers that we had seen in the second quarter of FY24, and as against 4.2 lakh, that is the average that we have seen for so far in the third quarter. So this sudden surge in air traffic, now this could have led to the sudden surge in the air ticket prices for the 7-day forward. But when it comes to 2-month forward prices, what we are seeing is that there have been actually a decline in the prices, or they have more or large remained stable. So no price increase when it comes to 2-month forward, but yes, when you're booking for a short term, there has been a sudden surge in the air ticket prices that we are currently seeing.
All I know, it's pinching us now.
And how?
And how? I mean, my family had to flew back last evening, and Delhi Mumbai airfare. Okay, I admit that it was a late last minute ticket purchase, but that costed 2 tickets 40,000 rupees.
That's steep. Yeah.
No business class, no premium economy, normal an air carrier which we use,
basic Delhi Mumbai tickets,
and a low cost air carrier.
Yeah.
So why is there a surge? I think we are in for an amazing December this time, both in terms of the travel, largely because of what could happen. See what happened during Diwali Dashera, we saw a huge uptick in terms of spending, but I think December you can easily see the hotel booking, the air travel, what essentially is happening there. I think I add that all up.
Yep, okay, so get ready to shell out a lot more, and those are some of the factors that can be attributed to it. Tell you what, as you digest that news, might as well do it with an edition of Khane Pe Charcha. We actually, Nikunj had the privilege of getting, a close interaction with renowned celebrity chef and entrepreneur Sanjeev Kapoor with some cooking tips as well. Take a look.
It gives me great pleasure, and I would say a rare pleasure, to have Mr. Sanjeev Kapoor on ET Now.
World has been kind to me, God has been kind to me, and what else can you ask for, right? नहीं तो खाना बनाने वाले को कौन पूछता था?
जो भी चैलेंज है, मैं सीखूंगा.
बिल्कुल, बिल्कुल.
Can I text my wife saying that रात का पास्ता आज मैं बनाऊंगा?
हाँ.
You think तो बताएं जी कैसे चल रहा है?
ये जो शेफ है ना होटल का, वो साथ लेके जा रहा है. जो करी है ना उसने. आज से आप इनको बुलाएं शेफ निकुंज.
अब कह सकते हैं ना, अपनी खाने की तारीफ नहीं करनी चाहिए.
मैं कर देता हूँ.
You should put a name to this dish now.
SN cumin spaghetti.
SN cumin spaghetti. देखिए नामकरण भी हो गया.
Back with the market right here on ET Now. The implied Nifty is already indicating a star at that 20,300 levels. So seems like we're headed in for a good day, much unlike our Asian peers, which are reeling in the red as we speak right now, although the Dow has managed to finish off at the yearly high. Let's welcome on board Sanjeev Hasseen and talk about what he's feeling about the markets right now. Sanjeev, much unlike Delhi morning, firstly, here in Mumbai today as well, we have quite a bit of foggy morning, but the fog seems to have completely cleared out for the markets, less than 100 points, and we should make it to an all-time high.
Yeah, good morning, Aisha. So, yes, fingers crossed, the best month for both the Dow of the year and for the Nifty. I mean, where have you seen such a month? And it finishes with a flourish with more to go. So I think, the pessimism from last week of October got overdone. And that is where you had to be a little bit brave-hearted and realize that you were headed for the best month of November. And we've been repeatedly saying, and if you've been watching ET Now, then you've been, you'll be laughing your way to the bank. You are right on the fog. Delhi has cleared and there is no embargo on traffic now. So superb weather, and cheers to Bombay and cheers to a new high, which is very much on the cards today. But more than that, it is the broader market which is making all-time highs. And that is where people are missing the wood for the trees.
Yes, so Sanjeev, who better than you to guide our viewers as to how to make best use of this rally right now in the broader markets, which refuses to abate. Give us 3 stock ideas where you think one can still buy and make money in mid and small caps.
So Aisha, like I said, now the dumb money which was left on the sidelines, I mean, I don't categorically call that dumb, because foreigners generally sell low and buy high. And that is what the adage is. So if you have been a trader, this is a good time to book profit and go on an early vacation. But if you are still there, then some of the banks are looking extremely good. Federal Bank would be my top pick over there. This 146, 147 consolidation may play out. Mid-caps, in the mid-cap earnings, because of their presence and increase in the gold loan basket, their NIMs are at the highest ever. So I'm very, very bullish on Federal Bank. I think 160, 165 is very much on the card. Second would be PNB. I think PNB arguably came out with the best results along with CanBank in the PSU space. And at 77, 78, again, it gives you an offering of going to new highs closer to 85. My third pick is a slightly name which I've been tracking for some time and I have a vested interest. Let me make a disclosure, is SW Solar. They were stock and, unambiguity because of a cost overrun or a delay in bank guarantee which got encashed overseas. And the old promoter, that is the Sapurji Palonji, had to make good the indemnity. They were up till 30th November and Today there is clarification that they have cleared all that. They have cleared the indemnity and there is no pending of the bank dues. The company has a debt of 1,000 crore for which they are raising capital. But look at the order flow. They have just recently announced a deal which is in the making for $2.5 billion on solar panel servicing with Nigeria. There has not been a single order yet from the parent group, that is Reliance Energy, which is looking at 35 gigawatts. So if you have the patience that in the next 2 years, this stock is a doubler. And I would say that don't go quarter on quarter, because a large part of the weakness and bad results and such all is all there. Their earnings, their transmission into a 12% EPC playout are very, very strong. They are the lowest cost MEP player in the world. So SW Solar is my dark horse play for the next year and beyond.
Okay, there you have it. A lot of recommendations, and we will be digging, probing and getting a lot more. But just for a moment, let's deviate then and focus on an interesting and a candid chat that my colleague Ajay Sharma had with Nandini Piramal, the Non-Executive Director, Piramal Enterprises and Chairperson, Piramal Pharma, talking about the management's immediate priorities for the next few years. Let's get a sneak peek into that very special conversation.
I think the benefits of hospitals and I think some of our doctors are amazing, and I think the kind of treatment that you can get within them is probably world class, right? I think the government's done interesting things with expanding the access to primary care and even things like institutional delivery. So for example, in our foundation, we work with the aspirational districts, which is a program by the PM, where we're trying to work on reducing both maternal mortality and infant mortality. And, these are areas which are very, very tough, right? The hilly areas and that's, I think, where we can continue to improve access to institutions for some of those residents there. I think that'll be also beneficial.
I also noticed, Nandini, that you guys have put out a very interesting annual report this time around. It talks in detail about the plan and the the kind of plan you're aiming at executing. If I ask you to put it in words for the next 1 or 2 years, the immediate priorities of the management, what would those 3 priorities be?
I think revenue growth, focus on operational excellence, cost management, and productivity.
Okay, that conversation you can catch today at 10 a.m. In the meantime, let's just take stock of all the buzzers from yesterday, while autos, of course, have been in a good stead. Yesterday, you had the entire cement pack jump up quite a fair bit. Beat the likes of India Cement, Ultratech Cement, they all held out very, very smartly. Sanjeev, any opportunity you think within cement?
Well, Aisha, I have been on record. Ultratech has been my biggest holding. I've been telling you to buy ACC, Ambuja, both on the back that there was hardly anything on the Adani case. And both those companies combined owned about 58 million tons of capacity. So I would still go with ACC, Ambuja. You can add Shri Cement over there, given that pricing power is very strong for them and their cost is the lowest not in India, in the world. But I would stick my neck out that Ultratech is headed to 10,000 and beyond. So stay with market leader as a vested interest. Both ACC, Ambuja and Ultratech are in our portfolios. And we are very, very bullish on that entire space.
Okay, fair enough. And I'm curious to get in your take as well, Sanjeev, as to where you're seeing opportunity within the entire auto space, given that it's the first of the month. We'll be anticipating the auto sales numbers. Take us through some auto ancillary top bets as well as auto.
So clearly Ashok Leland, and I was on record 165, 168. It hit 181 yesterday. I think 225 is very much on the card. It is not just the Indigo, it is the bus which travels the passengers from the airport to the terminal. All that is blue is Ashok Leland. 53% market share in the bus market and raring to go. And their EV foray is doing extremely well. So Ashok Leland in the CV space. Second would be Maruti in the four-wheeler. No question that how they are expanding their new portfolio, and the weighting is amazing. And I think their margins may be arguably in this quarter at the highest. So Maruti headed for 12,000. And last but not least, I have been an advocate and hold Bosch from 12, 13,000. 25,000 was a joke last year, but that's very much on the card. So stay with the market leader. You can add an Apollo tire. I think that would be a very, very good proxy, given that rubber prices have again softened and there is hardly any Chinese import. So Apollo tire can give you another 10% from there. However, as a caveat, these are all stocks hitting new highs. So do a little bit of diligence, but buy some now and wait for corrections to add more, or do a sip.
And Sanjeev, were you lucky enough to get in on the smasher debut of the year, that is Tata Technologies, and what did you make of the stellar listing and moves that it made yesterday?
Well, no question, euphoria, and that is telling you that quietly we are in a broader market and people are not even, acknowledging that. So I think Tata Tech listing was a superb listing. But I think now with Tata Elxsi and a lot of the other names trading cheaper and at less market cap, which have a very, very strong proven record, I would not chase this stock. Let it go to people who are delving into that. I would still stay with some of the large cap plays which are giving me much more reasonable comfort on owning. HCL Tech has been my top pick over there. I still think HCL Tech is headed to 1500, and I would add a persistent and a Coforge on declines.
So let's look at Tata Tech IPO, let's look at IRDA IPO, where they are and where the valuations are stacked up. Let's go forward, let's look at Tata Tech IPO. It has made history, and A, it was a Tata Group company, B, there is excitement in the IPO market. But at FY24, which is the current year, 2 quarters already in, Tata Tech is trading at a P multiple of 77, KPIT 67, Tata Elxsi, which in a sense was like this jumbo mover which surprised everybody in last couple of years, is trading at 63 times, L&T Tech 36 times. Yes, you can argue back and say, okay, the growth rate is different, margins are different, it's a Tata Group company, but you got to compare apple and apple, you cannot compare apple and oranges. My limited point here is that the approach should be very simple. You do not want to chase the stock. If you own the stock, hold the stock. You don't sell the stock because it has run up, but just because the stock is from a Tata stable, ultimately the question you got to ask yourself is that, can you make money if you buy a stock with that kind of an underlying growth at 80 times? The answer to that, well, maybe no. I'm not saying that Tata Tech is going to fall and is going to collapse. I mean, it's not going to go the consumer tech and the fintech way. But at this juncture, to chase the stock and to assume that you're going to make extraordinary returns, well, that's not what history has taught us. IRDA, flip it about. There the story is very different. It's trading at about 1.8 times, PFC 1.2 times, REC 1.2 times. It's reasonable. I can argue back and say, and which we argued with Sanjeev, with Bhasin Saab yesterday, that why should one not buy SBI or HDFC Bank? Well, I think the growths are different. There is a very unique advantage this company has, that it's going to become a mini Navratna soon, and it is addressing an area which frankly a lot of big banks will not be able to address directly. So there's a niche premium, there is a bit of a valuation advantage. You add all that up. If I have to do a like-to-like comparison between Tata Tech and IRDA, I would say IRDA is looking better in terms of the valuation approach. So Bhasin साहब एक कल phrase use करी थी पुरानी हिंदी picture की, IPO market में क्या हो रहा है, and the phrase I use was सब chance पे dance कर रहे हैं.
I agree with you, Nikunj. चांस पे डांस कर रहे हैं क्योंकि माल ही नहीं है. जब आपके पास माल लेना था तो आपसे लिया नहीं गया क्योंकि सबने यूएस और अरे यूएस मार्केट ही has gone to new highs or almost there. And why are we doubting this rally? Please keep your eyes and ears open. The FIs are no longer the driving force. It is the local retail investor. He is lapping up whatever good stock he is getting, even though it is at a premium. You are right, चांस पे डांस है क्योंकि अपॉर्चुनिटी मिल रही है, लेकिन कल जिसने IRED में भी 51-52 में लिया वो भी 87 रुपए डबल पे बिका. So I am of the opinion there is a lot of froth maybe in the IPOs because there is chance over there, but you have to be little bit watchful. But the bigger market picture is simple. Nikunj, you are getting a lot of opportunities. Look at stocks, you know, आपके याद मैंने याद है 35-40 रुपए में कहा NBCC is a no brainer, नहीं चला 2 साल. Yesterday it hit a new high of 76. Now it's looking good for 100. So there is a lot of valuation comfort in a lot of businesses across the board, PSUs, power, railways, which are giving opportunity. Only you have to wake up and smell the coffee. The broader market is where I would be very, very comfortable with a Kotak or an SBI and HCL Tech to put my money.
Wake up and smell the coffee. क्या बात है? अभी coffee खत्म ही करी है. Yeah, you need that cup of coffee early morning. I must admit that. But that's Kotak Mahindra Bank for you. Let's look at that data which we've been using from yesterday. That how some of the large cap stocks are in this hibernation zone. Kotak, HDFC Bank, Reliance, even for that matter HUL, they've just been in this hibernation mode. We may be at an all-time high. You know, we are talking about Nifty all-time high, Nifty all-time high, Nifty all-time high. But bhaiya, big picture alag hai. Look at the big picture. HDFC Bank 14% weightage now, 33 months no return. Kotak Mahindra Bank, the real darling, 32 months no return. Reliance, 20 months no return. 20 months no return for Reliance. You can be charitable and say, okay, add the value back of Jio. But then also it's like 15-16 months of no return. Infosys, 17 months no return. ITC, L&T, ICICI Bank, well, they've given returns in last couple of months. So Naresh, I'll read that list again for you. You believe in this theory that longer the stock consolidates, the better it is for me when it is getting rally. Has HDFC Bank, Reliance, Kotak Bank, all of them have consolidated for 2 to about 3 years. Are they getting ready for that big move now, Naresh?
So when we see such long-term consolidations, first cases, we look out for a bounce. And then maybe once we start crossing highs, that is where the rally starts. So if you look at a classical example, we had of a long-term consolidation was Reliance Industries back in 2010 to 2017, where it would, on an adjusted basis of today, 550 was the highest price. We would always keep flipping back. Similarly, today for HDFC Bank, that price is 1700. So till the time we don't cross 1700, you don't have a huge rally. Yes, from 1550, can it go to 1600, 1640 levels? So that's the bounce we are expecting across the board. You have Kotak Mahindra Bank, HDFC Bank at the lower end. Reliance has made a flip back up. So a lot of these stocks which have gone into consolidation, say Hindustan Unilever was at 24,500 back in April to June of 2020. We are still at the same prices. So can it go from 2550 to 2700, 2750? Yes. But a fresh rally or a multi-year high would indicate a further rally. But for now, expecting a 5 to 8% bounce across this heavyweights, which have gone sideways for a long period of time. So my bet would be HUL makes a bounce back, HDFC Bank makes a bounce back, which could propel Nifty to a new all-time high.
Okay, the other stock which is revisiting, or the other group which I think is worth revisiting, are OMCs. We don't talk about it. Oil marketing companies. Let's look at a one month change here, and 57% higher for HPCL. HPCL is 37%. 1 month change is 37%. So out of that 50% change, 37% has come in last 1 month. Flip it around with BPCL. Of course, HPCL has this trigger that they are looking at divesting their lube business. But BPCL last 1 month, 22%. Batin sahab, ye kya ho gaya? Nothing has changed for them. But stocks have come back.
Correct. And that tells you that refining margins have arguably been the best. Results were very good. And the undoing has been the cheap Russian oil, which they've been getting at a discount. You didn't have to make tom-tom and advertise, but quietly they were doing that. Plus, they process harder and softer, both types of fuels, rather than Reliance, which just processes hard. So that has been the changing difference for IOC. IOC, you didn't mention, 5 rupee dividend and almost a 30% gain. So IOC, HPCL, BPCL are still looking strong. And like I said, it's the whole basket of PSUs which are duly getting their recognition after many, many years. I am very, very optimistic that some of them will still have more steam. And that is why the PSU basket or the CPSE ETF, I've suggested this for the last 4 years. That is the best conduit to buy 12 basic stocks. If you are looking, don't chase the new stocks at new highs because you have the fear of losing out. But if you chase an ETF, that is the CPSE ETF, it has a comprise of about 12 of the best blue chips of PSUs. But I still think HPCL, BPCL, IOC are headed higher.
They headed higher. I mean, I'm trying to understand that this is a sector where you may say that the spirit of true deregulation has not been followed. Oil right now is manageable, but if oil goes higher, we've seen that how oil marketing companies have to bear the burden. I mean, the government has gone on record and said that bhai, ye to achhe citizens hai, somebody has to be a good citizen when there is a problem. So right now things are looking good, but if crude goes higher, they will not get their bit.
Agreed. Nikunj, but that has been a constant foray. In the last 2 years, at least, there has been market dynamics on crude and diesel pricing. And government has not interfered in any way. So there has been a pass-on effect. Yes, the weaker dollar makes them little exposed to the FX fluctuation, but their margins and their gross refining are even done better than Reliance. So I am in the camp that markets are not looking at that broader and that 20-year-old picture of crude at 80 and 90. Look at auto sales. Autos are doing the best when crude is on a high. So I think growth is back. The Indian normal, jise kehte hain, middle income citizen is spending where he wants to. And like you said, if December is a robust month, then crude oil consumption and so on is very, very strong. So distillates are doing well. GRMs are at a high, and I think that that Russian imbroglio has played out excellently for the OMCs in India.
Okay, Sanjeev, good to have you on board. Thanks so much for taking time out and joining in. Well, let's welcome on board our next guest then. And Sandeep Sabharwal is joining in. Sandeep, it's Friday. It's the start of December. There's lots of reasons to smile. We've got the festive cheer. Everyone's saying that the Christmas rally is only going to continue. And I wonder if the smile on your face is going to widen, or even if I'm going to see one with respect to Tata Tech IPO. Did you manage to get your hands on that smashing debutant?
No, because the oversubscription itself was so high that the allocations came to very few people. And I think obviously the way the IPOs are performing, that by itself creates a new set of investors who could potentially come into the secondary markets, because we need to remember a lot of people who invest in IPOs are actually not equity investors. They just invest in the IPO because they think it might be a good IPO. Then they get allocations, and then slowly that journey starts. So I think IPOs doing well is good for the overall market.
You're sounding unusually bullish to me. Normally when IPO goes high, Sandeep Sabharwal would have come out and said there is a bubble, there is a trouble, there is excitement, there is euphoria. You've been very bullish of late. Am I missing on something?
No, I think see, when things change, we need to change our views. So we can't be bogged down by a single view at all the time. So I think last 2-3 months, things are very clear that after a potential correction, we will see a start of a new rally, because a lot of global macro factors are falling into place. And all of us know about it. Eventually, the larger markets move on macros, and then you go and look out for specific stocks you want to play. So in terms of macros, we know bond yield seems to have peaked out, US dollar index seems to have peaked out, interest rates seem to have peaked out, so, and inflation seem to have peaked out. So when all of these things are there, then there is no reason for us to be bearish. Now, if the market move up too much too fast, then we turn cautious in the short term. But overall, 2024 should be good.
Do you know, the normal temptation, Sandeep, is to book profits, right? Market has run up, the rally is strong, Nifty is now reaching that congestion zone. Do you think one should not fall into the trap of booking profits, at least in some of the large cap stocks now? Do you think what has just started in terms of a trend actually be a big move by the time Nifty or large cap stocks peak out?
Yeah, I think so. See, even my portfolio is more weighted towards mid caps, but I do believe that 2024, just because of mean reversion, mid caps have rallied almost 40% this year. Large caps have rallied 10%. Large cap valuations are more near historical range, some plus minus 2, 3, 5% here and there. So next year, as the foreign fund inflow also returns into emerging markets, including India, the probability that large caps will outperform is much greater. So I think there's no reason for either for people who were holding large cap, they did not perform, they saw mid caps doing well every day, small caps rushing up to dump their large caps and move into stocks which potentially the valuations are so high you won't make money. So I think next year large caps will do well, and mid and small cap should also continue to do well, but we won't see the kind of outperformance we saw this year.
The other stock which is worth revisiting again is Bharti. We've written it off. I mean, there was a time during pandemic, we all were working from home. So we said, okay, buy Bharti because Bharti will do exceptionally well. Data consumption was growing, so Bharti will do well. It's fallen off the radar. Even though Jio has not done anything very damaging, Bharti this year has appreciated by 25%. So that's one outlier for me. The second outlier, Sandeep Sabharwal, in my book is what's happened to OMC stocks in last 1 month. HPCL, BPCL, 30-40% spikes.
Yeah, I think that's the only risk to the markets I see, because typically at potential at one point of time people start playing stocks where there's no real story per se, because the fuel prices are still under control. They are not likely to be increased anytime till the general elections. And it is a business in which how does an investor play this business, because you don't know what profits will get reported, what the government will do, etc. So I think stocks which did not perform rallying now is the only sort of red flag.
Kunal is doing a double take on his charts, and not of any stocks right now, but of the charts of gold. And that's something that was just coming out of my mouth as well. I think it was on Wednesday's trading session, very close to all-time highs. What is the chart reading on gold, Kunal?
I think it's very rare. So I'm talking of gold on the dollar denominated charts, and I remember, I think 2021, 22 and 23 first half, there was a major resistance line which was drawn for gold prices. I think it was around $2,070-$75 for gold prices. And when stock prices or when asset prices, they generally tend to form a major resistance line in terms of the long-term charts. It's very difficult to try and break past those resistances, and if that happens, we could be looking at an altogether new trend coming up into the into those kind of asset classes. So 2070-75, I think is now just 1% or 1.5% away in terms of the gold dollar denominated prices, and I think if that level gets taken out, we could be looking at an altogether new kind of a bull market or a major uptrend coming out for gold.
Kunal, I also wanted to get in your take on a chart, Delta Corp. It had been, of course, battered and bruised, and in yesterday's trading session, we saw a near 6% up move at 144. What are the charts reading? Is there any hope of some sort of a decisive pullback?
See, in a sharp corrective wave or a downtrend, there are bound to be those phases when stocks get into a sharp rally or a counter rally as such. But we'll have to try and distinguish that those are just rallies in the larger scheme of things and not trend-changing moves. I believe that what we saw yesterday for Delta Corp was a mixture of closing of the current month positions, because it's now become a physical settlement, so traders would not want to carry forward short positions into the stock. They would want to cover those positions even if it's last minute for the stock price, and then hopefully start the fresh series, which is from today. We could be looking at a built up of fresh short positions yet again on the stock price. So not bullish on the stock, and I would believe that traders should try and refrain building up long positions over here, especially on the delivery side, because the possibility of the stock going into a downtrend is pretty much high.
Okay, and by the way, Delta Corp invested about 99.9 crores in Peninsula Land, and maybe that was one of the triggers for yesterday's up move on the stock price. But 142.6 is where it's at. Sandeep, would like to get in your take on real estate as well, because basis the kind of trends and interactions that we've been having with corporates within the space, it's looking pretty strong by way of residential, commercial sales, demand picking up, etc., and pricing. What's your sense as to where there's opportunity in real estate?
Yeah, I think all the things you said are perfectly true. There's momentum. It's very surprising that high value real estate is getting lapped up so aggressively at a time where actually the consumer demand is slow. If you see low ticket items or consumer goods, there the demand is slow, but somehow on the some premium segments, and especially real estate, the demand trends seem to be very strong. Now, that's how the real estate sector is doing. In terms of stock picking, it's very tough now because the stocks have run up so much that it's difficult to find value. So I would think that the trend is still on in the real estate sector, but we need to wait for better levels. I am not buying at these levels.
When we say financials, we think banks. When we say banks, buy Kotak, buy HDFC Bank because they've underperformed. You know, that's been the narrative from last 6 months. Banks means HDFC Bank and Kotak Bank. They have underperformed, buy them. Momentum means PSU banks, buy them because they are coming out of a 10-year bear market, so to speak. But there is a lot outside financials, outside up, away from banks. Insurance has made a comeback. We've seen a comeback which has happened in the AMC stocks. We've seen a comeback which has perhaps happened in, let's say, CDSL. What else would you like to buy, given that the theme right now in India is financial inclusion?
I think all the categories you obviously named out. So there are banks, there are NBFCs, then these are these stock market related financial stocks, so to say, like BSE, CDSL, CAMS, etc. Then there is a segment of, like you said, AMC's brokerage stocks. So typically brokerage stocks I don't buy, although they've done exceptionally well, because I believe that the competitive intensity is so high and very difficult for one to distinguish one from the other. But I think a lot of these stocks like CDSL, BSE, CAMS, etc., these could continue to remain compounders, although not at the rate at which they have compounded, but at a slower rate because the growth trends will remain. And financials, the large cap banks which underperformed this year because they are FII favorites and we saw continuous selling, there we could again see a bounce back next year.
I want to go back to Tata Tech and Ida to just talk about valuation. So Sandeep, here's the data. Tata Tech is trading at a P multiple which is higher than KPIT and Tata Elxsi on a FY24 basis. IDA is trading at a price to book which is higher than that of PFC and REC. But again, these are businesses which are going to be growing at a much higher pace because of the base. So if you have to say like this is a good time to, this is a good price to buy Tata Tech and this is a good level to buy IDA, what would be those levels?
See, because the listing happens at such a premium, then giving a rate which is much below becomes so difficult. But I believe that for something like Tata Tech, buying in the secondary market above 800, 900 makes no sense given the growth trends and valuations, because only at those levels it becomes attractive. And I'm not very sure because there is no specific reason why it should be trading at such a high premium.
Right. That aside, Sandeep, just wanted to figure out whether in the last 2 odd months you've been a buyer in any of the IPOs or subscriber in this case.
Yeah, Aisha, there might be IPOs I like, but the only reason I don't apply is that the allocations are so low and sometimes there are no allocations that it makes no sense for us to keep on doing that. And then you get small allocation, you think it's a good stock, you're undecided you want to buy or not. So that's the reason. Unless I see getting some allocation in good stock at good valuation, I don't actually apply. But that doesn't mean that one should not apply, but then I don't.
IPOs in 2023, Tata Tech, Idea Forge. By the way, where is Idea Forge actually? I think yesterday it fell, yeah. Guys, please remember, ultimately markets are a true leveler. What may happen in the short term, it may be a spike here, it may be a spike there. It works the other way around in a bear market where value becomes extremely, obvious and the fear just grips you. Look at Idea Forge. What was the 52-week high versus where it is right now? It like had this bumper number 100 times oversubscription, went to some crazy P multiples. Blink of an eye and a 1300 rupee stock has come down to 780. Now you may look at the listing of Idea Forge and say, okay, bumper, drone, new area, but it just went to a crazy P multiple and that's where markets will equalize. So please don't do chance pay dance in the IPO market. Please don't do that. It is not a lottery. There is a difference in skill and luck. Right now what is happening in the IPO market is luck, not skill. And in financial markets, you need luck, but you also need skill. So please don't forget that. Idea Forge is a clear example. I'm using that for just illustrative purposes to demonstrate that when IPO comes out, there's a crazy interest in it. It just goes out of the whack. Everybody thinks that this is the next new thing. And then when the realization kicks in, when market equalize, look at what's happened. We've seen that to fintech companies, right? Zomato went to 150, came down to 155. Paytm, some crazy number in terms of IPO level. Look at where it finally bottomed out. So Sandeep, I guess this simple story is telling me that never ignore risk. Chance pe dance mat karo.
Actually, dance per chance, but then it's okay.
But
No,
that's the way it is, right?
yeah. So I think Idea Forge, in fact, it came out. I've been actually tracking the performance also. The performance has been actually fundamentally, if you see, even at this price, it is so crazily valued. Like the sales have been doing badly, performance. So people see a segment, they think that it will just this segment will just go crazy into a crazy growth. It doesn't happen that way always. So I think you need to recognize risks also.
Nuresh, if you make an all-time high today, technically that means that there is no resistance in the market. So when you are in this blue sky zone, what happens next?
So given that we've had a one-way rally, we may not ideally say a breakout into new all-time highs would imply there is a 5-6% upside. It's just that we've started from 18,800, 19,000, and it's been a good rally. So we are a little overbought. We are not just on a fresh breakout. So in this case, I would expect a move at least of a couple of percentage points before it takes a pause. So 20,500, 600 would be an upside target. The good part is it is not just India which is breaking out. We are seeing a breakout up across various global indices. So Nikkei is on the 5th attempt to make a new 52-week high. You have Germany DAX closer to making a new 52-week high and an all-time high. You have Dow Jones making a new 52-week high yesterday. You have S&P 500 close to that. You have a Brazilian market which has done well over the last few weeks. So it's not just India, it's a global bull market. So that makes it possible that we could extend the rally as well if it continues. So the bias remains positive, and we could expect some bit of outperformance from the large caps compared to the mid caps.
Great to have you on the show. Seems like a given that we're going to hit that all-time high of 20,222 to be precise. 0.4 is well added there actually. We'll take a very quick break, come right back. We'll have the pre-open settled rates and hopefully we should make it to that all-time peak.